Hello everyone, we have a great guest today, Bill Angove from Asset Preservation Incorporated. Their headquarters is here in Roseville, California, but he is a national speaker that goes all over the United States teaching agents and lenders all about 1031 tax exchanges. A lot of new information, a lot of unknowns. Let's go in and talk to Bill about 1031 tax exchanges. Hello, I'm Eric Hatch with Century 21, your local real estate professional serving Nevada, Placer, and surrounding counties for over 25 years. I have helped hundreds of families find and sell their homes and pride myself on bringing experience, local market knowledge, integrity, and attention to detail to every transaction. Let me help you create your next experience worth talking about. Well, thank you, Bill. I appreciate you coming in and chatting with us a little bit. Why don't you share with the audience a little bit about your background and what you actually bring to the table today?
Sure. I work for Asset Preservation. I'm a national qualified intermediary for 1031 exchanges. Asset Preservation has been around for 29 years. We've done over 185,000 exchanges nationwide. Roseville is our national headquarters where I'm based, and we have operation in New York also. My background is now 30 years in the real estate industry, 10 years as a commercial broker in the Sacramento region, and I've been with API marketing to CPAs, attorneys, commercial brokers, realtors, anybody that touches a real estate transaction. I market to them via seminars, etc., statewide and nationwide.
Fantastic, thank you. So let's say we have a transaction of somebody's investment property, and they want to go ahead and sell it, and then we have the term 1031 tax deferred exchange. Can you please explain to the audience a little bit what in the world does that mean, and how does that work, and how does your company come in and be involved in that transaction?
Sure. This is part of the Internal Revenue Code. It's Section Code 1031. It's actually been around since 1921. In today's format, what it allows someone to do is sell an investment property, defer their taxes, both state and federal, and buy a new investment property anywhere in the United States. As a qualified intermediary, what we do is help them document their exchange from the IRS standpoint, and we hold their proceeds. The regulations stipulate when they sell that investment property that they've got a decent amount of gain on, they can't touch their proceeds, so that money is wired to us to be held in trust during the exchange process.
Yeah, I know that was we had a transaction that was very clear and said that money cannot just go to the escrow company. You're basically opening two escrows is what you're doing, kind of one escrow for the regular escrow, then and bringing you involved in there to handle the funds and the transfer on that too.
Yeah, an important thing to remember is we get calls all the time. I closed last week, or I'm closed yesterday, and the money's sitting at my favorite title company. Unfortunately, it's too late. So kind of if you're new to this topic, the exchange needs to be set up with us prior to close of escrow, such that when the funds come into the closing, those monies are wired to Asset Preservation to be held. Yeah. So very similar like a double escrow. Yeah.
Perfect. So there are some extra fees and stuff in there, but obviously the reverse exchange on that is a little bit harder to do, because I know you can do some reverse exchanges, but that's maybe another topic in another day. But why don't we share what most people always ask and say, Bill, I'm thinking about selling my property. I'm going to put it on the market. I want to sell it. And how many days and what are the procedures of what I have left, and when do I do identify the property for my exchange property? So Here it is, guys. Here's the meat potatoes here.
Kind of the checklist is you would put your property on the market, call it a rental house or any type of investment property for that matter. You would find a buyer. You would open escrow with your favorite title company. I typically recommend that once they've removed contingencies is the time to get us involved. Have us talk to the client, find out how long they held the property for. Is it held in a trust or a corporation or an LLC? From that point, we would prepare the necessary documentation for them. They would sign that along with the other documents they signed at the title company, so we would send the documents in advance. So they review that, and then they close, and that's the most important thing. As we just mentioned, the proceeds are sent to us to be held. From that closing date, they have 45 days to identify in writing what it is they're going to potentially buy in the exchange. And that's the hardest part about doing a 1031 is finding the replacement property, and that's what Eric would be good at, is if you know you're going to be closing on December 1st, what you can be doing is searching via the parameters of the pricing and demographics of where they want to buy in advance, and they have a total from the same closing date of 180 days to close on your replacement property.
And is it still true that you can actually identify up to 3, or is it 3 properties? Is that still the rule?
That's one of the options.
Okay.
The first option of identification is you have to do it in writing. It has to unambiguously describe the property or properties you're considering buying. And one of those options, you can identify up to 3. You can identify A, B, or C. You can buy your replacement property immediately after you close your old one.
Okay.
It's just you've got that maximum of 45 days to identify those 3 properties. The second option, identification, is called the 200% rule. It essentially states that if you identify 4 or more properties, then the value of all those properties combined cannot be more than double the price of the property you're selling.
Okay.
So if you're selling for $250,000 and you identify 4 or more properties, the value of all of them combined can't be more than $500,000.
Okay, that's good to know. So there's another question that some people always ask me and say, I've got a large commercial property for sale down in, let's say, the Bay Area, and I want to come up here and exchange it for residential. What are the rules and stuff when it comes to like property, and how does that all work?
Commonly misunderstood term is that if you sell a rental house, you have to buy another rental house. Very far from the truth. You can sell investment property. The code says property held for trade or business or held for investment may be exchanged for like-kind property, meaning you can sell a rental house and buy an office building, sell an office building, right on the house. What we're seeing a lot of is the boomers are, they own 3, 4, 5 properties, and they would consolidate all the money from those 4 or 5 properties and go buy a commercial building. So that is possible. I like to say they're getting out of the T's: tenants, toilets, termites, trash, and taxes.
Yeah.
So they're getting rid of those types of tenants and maybe buying a CVS triple net lease on a 25-year lease deal where it's they get 5-6% cash on cash return per year.
Fantastic. So what other how can they find you, or
Sure.
give them your information so if they're interested in that, how can they find you?
Various ways. If you're from out of the area, we have an 800 number, so it's 800-282-1031. Our local number in the Sacramento region is 916-791-5991. Our website is apiexchange.com. Again, that's apiexchange.com, and my email is bill@apiexchange.com, and my cell phone, which I have on quite often, is 916-832-1031.
I love that, 1031. So somebody asked me the other day that they have been living in their home for about 5-6 years, and that they wanted then to go buy a rental property or go buy the next house. What are the rules when they move into another home, and how long when does their primary residence now turn into something that they could change and exchange into down the road?
So the primary residence will state that you have to own and live in the home 2 out of a 5-year period. So if you've got a primary residence you lived in for 5 years, you can rent it out for up to 3 years, no more than 3 years, and still claim the primary residence exclusion. So what we see a lot of is people that own rentals, and they want to sell their primary residence and move into that rental. And there's special rules, and it's probably more detailed than we have time to go into, but if they exchange from property A to property B and they eventually want to move into it, there is no set holding period, but a lot of tax advisors say hold the property for a minimum of a year to more conservatively a couple of years before they do their next exchange or maybe convert the property.
Okay. And so you made this something real clear and important, is that yes, you'll need an escrow company, yes, you'll need Bill, but then you should also consult with your
Tax or legal advisor.
Yeah, the legal advisor on that. So before you do that. So Bill, thank you very much for coming in and chatting with us and enlightening us about what a 1031 and that is. So thank you so much for coming in.
My pleasure.
Appreciate it. Thank you.